Hi friends, today I discuss income from house property under Income Tax Act 2025. As per section 20, subsection 1, annual value of any property consisting of building or land appertaining thereto shall be chargeable to tax under the head income from house property. Subsection 2 says subsection 1 shall not be applicable if the assessee occupies the property for his business or professional uses and the income from it is taxable. The annual value of the property is determined under section 21 and subsection 1 says the annual value of the property shall be higher of a sum for which it might be reasonably expected to let from the year to year or actual rent received or receivable by the owner. The subsection 2 is if property or part of it is let and was vacant for whole or part of tax year, and if actual rent received falls short of annual value, the actual rent received or receivable shall be the annual value. That shall be the income from house property. And the subsection 3 allows the taxes levied by local authorities from the annual value to be reduced. Balance will be taken to taxation. Subsection 4, the rent which cannot be realized or the actual rent received is less than the annual value. Only the amount received or receivable shall be the annual value and rules will be made for that. The subsection 5, if the property is held as stock in trade and not let, the annual value shall be nil for 2 years from the end of the financial year in which a certificate of completion is obtained. So for 2 years, it can be hold. Uh, it can be held as stock in trade. Subsection 6. The annual value shall be nil if the owner occupies the building for his residential purpose or he could not occupy for any reason because the employment is far distant, living in distant place like that. The provisions of subsection 6 will apply in respect to only two houses that the assessee specify, and it shall not be uh, possible, it shall not be eligible if the building is actually let out. There are deductions allowable from the annual value, that is 30%, flat 30% will be allowed as a deduction from the annual value determined under section 21. If the property is acquired or constructed with the borrowed capital, any interest payable shall be deducted. If the capital is borrowed prior to the tax year in which the property is acquired or constructed, the interest payable paid is allowed as deduction in 5 years, one for the current tax year and for succeeding tax years. The property referred in 21(6), the deduction shall not exceed for interest uh, 2 lakhs if the property is occupied for the residence of the assessee. The maximum amount eligible for deduction is 2 lakhs. If the property is acquired or constructed with the borrowed capital and completed within 5 years from the tax year in which the capital was borrowed, the assessee should produce a certificate. That means the property must have completed within a period of 5 years from the tax year in which the capital is borrowed. And subsection clause 2 is assessee must produce a certificate in this regard for the actual rent. In any other case, the deduction will be limited to rupees 30,000. Deduction from house property under section 22 subsection 3 is for deduction under section 22 subsection 1 clause C, the amount already allowed as deduction under any other provisions will be taken into consideration while allowing deduction under this section. The subsection 4 is the certificate referred in subsection 2 shall specify interest payable on new loan if subsequently capital is borrowed for repayment of all or part of such loan. Subsection 5 is the aggregate deduction shall not exceed 2 lakhs. This is repeating. Earlier subsection is repeating here. If property is self-occupied, it shall not exceed 2 lakhs. Subsection 6 is if interest is paid outside India, deduction shall not be allowed unless tax has not been deducted or in respect of such interest there is no agent in India. These are the conditions for deduction of interest. Subsection 23, arrears of rent received and realized, how it is taxed. The arrears of rent received or realized shall form part of income from house property. That amount is also liable to tax. That amount will be deemed to income from house property. Shall be taxed even if the assessee is not the owner of the property in the current tax year. But 30% deduction from actual rent, arrears of rent received or realized shall be allowed as deduction. That deduction is allowed. The 24 section 24 section 24 of the Income Tax Act says if the property is owned by co-owners, the property owned owners share are definite and ascertainable. It will not be assessed as association of persons. Instead, each co-owner's share will be computed and will be taxed in their respective names. Relief is available under section 21(6) shall be provided if entitled. Section 25 is for interpretations of the terms used. Thank you.